One decision can change your financial future. What if one decision today could completely change the next 30 years of your life? Not by making you rich overnight, but by changing where every dollar you earn goes. Imagine two friends. They graduate from college together. They get their first job at the same company. They earn almost the same salary. They have the same dreams. A better future, financial freedom, a life where money is never a constant source of stress. Every month, both of them save $500. Neither earns more. Neither works harder. The only difference is one simple decision. The first friend starts investing in the stock market. The second decides to buy property as soon as possible. At first, their lives look almost identical. 5 years pass. Nothing dramatic happens. 10 years pass. Still, both seem to be doing just fine, but then something incredible begins to happen. The gap starts getting bigger. 20 years later, one person's wealth begins growing faster than ever before. 30 years later, one has built financial freedom. The other owns valuable property, yet still worries about monthly expenses. So what happened? Did one person simply get lucky? Did one choose the perfect investment? Or is there a hidden reason almost nobody talks about? For decades, people have argued about the same question: stocks or property? Ask 10 successful people, and you'll probably hear 10 different answers. Some will tell you, real estate made me wealthy. Others will confidently say, the stock market changed my life. So who's right? The surprising answer is, both can build wealth, but they don't build wealth in the same way. And more importantly, they don't fit the same type of person. Here's the mistake most beginners make. They spend months asking, which investment gives the highest return? Almost nobody asks, which investment matches my lifestyle, my personality, and my long-term goals? That question is far more important because investing isn't only about numbers. It's also about behavior. Psychology often matters more than intelligence. A beautiful house feels safe. You can touch it, walk through it, live inside it. It feels real. Stocks don't feel real. They're numbers on a screen. Green candles, red candles, prices moving every second. And your brain naturally trusts what it can see. That's why millions of people choose property before they ever understand investing. But feelings don't always create wealth. Good decisions do. And sometimes, the investment that feels the safest isn't the one that builds the most wealth. Today, we're going to compare stocks and property using real-world examples, simple psychology, and financial principles that have helped ordinary people become financially independent. By the end of this video, you won't just know the difference between stocks and property. You'll understand which one is more likely to help you build lasting wealth. Because this isn't just a comparison between two investments. It's a comparison between two completely different paths to financial freedom. And one of them may surprise you. Stocks build ownership. Property builds control. Now, let's look beyond the headlines, because this is where most people make the wrong decision. When people compare stocks and property, they usually compare prices, but smart investors compare systems. Let's start with property. When you buy a house, you're buying a physical asset. You can live in it, rent it out, improve it, or sell it later for a profit. That sounds amazing, and in many cases, it is. But property comes with responsibilities: maintenance, repairs, insurance, property taxes, unexpected expenses. A leaking roof doesn't care if you're having a bad financial month. The bills keep coming. Now compare that with stocks. When you buy shares of a great company, you're becoming a partial owner of that business. You don't fix broken windows. You don't answer tenant phone calls. You don't replace plumbing. The company keeps working. while you keep living your life. This is why many investors love stocks. They're simple to own, easy to diversify, and incredibly liquid. If you need cash, you can usually sell your shares within minutes. Selling a house can take weeks or even months. But here's where property has one major advantage: leverage. Imagine you have $50,000. That may allow you to buy a $300,000 property using a mortgage. If the property's value rises, your returns can become much larger. Leverage can multiply wealth, but it can also multiply mistakes. If prices fall, or you lose your income, debt suddenly becomes a heavy burden. Stocks can also fall, sometimes by 20, 30, or even 50%. The difference is psychological. When stock prices fall, many people panic. They sell at exactly the wrong time. Then, they watch the market recover without them. History has shown something remarkable. The greatest investors weren't always the smartest. They were often the most patient. They understood one simple truth: time in the market beats trying to time the market. The same lesson applies to property. People who buy quality assets, hold them for years, and stay disciplined usually outperform people constantly chasing the next opportunity. So the real question isn't which investment is perfect, because neither one is. The real question is, which investment can you stick with? Through good times, bad times, and everything in between. Because consistency, not excitement, is what creates real wealth. Yay? And in the next part, you'll discover which investment has historically produced higher long-term returns, why millionaires often own both, and how ordinary people can use the same strategy to build financial freedom. The truth: most people never hear "so." After everything we've discussed, which investment actually wins? The honest answer may surprise you. The people who become financially free usually stop asking, which investment is better? Instead, they ask, which investment is better for me? Because wealth isn't built by copying someone else's strategy. It's built by following a strategy you can stick with for decades. Let's imagine Marcus one last time. At 25, Marcus had one important decision to make. He had some savings, not a fortune, just enough to finally begin investing. His friends told him, buy a house before it's too late. Social media told him, the stock market is too risky. The news told him, a recession could happen any day. Everyone had an opinion, but nobody taught him how to think. So Marcus stopped listening to the noise. Instead, he started learning. He discovered something that completely changed the way he looked at money. Wealth isn't created by predicting the future. It's created by preparing for it. He realized something else. Every successful investor had one habit in common. They stayed invested. They didn't panic every time the market fell. They didn't chase every new trend. They didn't buy because everyone else was buying. And they didn't sell because everyone else was afraid. They followed a plan, year after year. While everyone else chased quick money, they quietly built lasting wealth. That's the real difference. Not intelligence, not luck, discipline. History has shown that broad stock market investments have produced strong long-term growth over many decades. Although returns vary and markets rise and fall over time, property has also created enormous wealth for millions of families. Rental income, property appreciation, leverage. These can all be powerful tools. But both investments have one thing in common. They reward patience, not perfection. The biggest mistake isn't choosing stocks. The biggest mistake isn't choosing property. The biggest mistake is waiting forever. Because while you're waiting, inflation never waits. Every year, your money sits doing nothing. Its purchasing power quietly shrinks. The coffee that costs $5 today may cost $7 years from now. The house you wanted may become twice as expensive. The opportunity you ignored may never return again. This is called the hidden cost of waiting. And almost nobody talks about it. Successful investors understand something different. They know that starting small is always better than never starting at all. Maybe today, you can only invest $100. That's okay. Next month, another 100, then another. Small investments, repeated consistently, can become something extraordinary. That's the magic of compound growth. It doesn't look impressive in the beginning. For months, it feels slow. For years, it feels ordinary. Then one day, your money starts earning money, and that money begins earning even more money. That's when everything changes. This is why Warren Buffett once said that time is one of the greatest advantages an investor has. Not because time predicts the future, but because time allows great investments to grow. Here's another lesson worth remembering. You don't have to choose only one path forever. Many financially successful people eventually own both. They invest in the stock market. They own real estate. They diversify because they understand that protecting wealth is just as important as building it. The goal isn't to prove that stocks are better. The goal isn't to prove that property is better. The goal is financial freedom. A life where money no longer controls your decisions. A life where unexpected expenses don't create panic. A life where your investments continue working, even when you're sleeping. That's real wealth. So before you ask yourself, should I invest in stocks or property? Ask yourself a better question. Am I building a habit of investing at all? Because your future won't be decided by one perfect investment. It'll be decided by hundreds of small decisions, made consistently, year after year. And remember this, the best investment isn't always the one with the highest return. It's the one that helps you stay consistent long enough to let time do the heavy lifting. If this video helped you see investing differently, tell me in the comments, which would you choose first, stocks or property, and why? I genuinely love to hear your thoughts. And if you enjoy simple stories about money psychology, investing, and financial freedom, make sure you subscribe to The Wealth Habit, because every week we explore ideas that can change the way you think about money and maybe change your future forever. I'll see you in the next video.